Okay, guys, hope you're well. I'm going to break down a chart and find a trade within it and see if I can build you up a framework to look at. So let's have a quick look, shall we? So it's kind of running on from a conversation I had with Casper earlier on this morning. We're in the bar in the Discord and I just dropped in to say hello. We're talking about daddy levels, etc. Now, they are very good and they're a good beginner's framework. Genuinely are. Now, that's what I'm going to base this on, but I'm also going to base it on a number of other factors. When you're looking at sort of something like this, you're trying to find a product that you know you can trade all the time. Well, for me, it's these lot here. Now, I'm waiting on oil. It's been a right royal pain at the moment. It's just going sideways. I'm waiting for it to break down. But there's nothing there. So is there anything anywhere else? Well, yeah, there is. Now this, I don't know what's going on with it because the correlation's out of whack with gold. Now this is pushing down. It's a slow market. We've got the indices. I'm not rightly sure what's going on. But then we're left with the pound US. It's gone sideways and it's at the bottom of a market, like a range. So there's an opportunity that this could either break it down or move up. So this seems to be the one. Now, if I have a look at the pound basket and I can see what's going on across there, well, this is the pound. Down, 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 down. It's a high probability this thing's going down. So if I drop it into a trading screen and I take all of my measurements off, so I've got no levels, nothing. Go out to the daily. Well, what have we got? Well. Now we can see a picture. And that picture is breaking out here. Let me make this a bit bigger for you. All right. We've got a strong move here and that. So if I'm putting daddy levels in, well, there we are. It's coming onto one right now as we speak. So just drop them in there. Okay. Now, these are tested levels. We know they are because it's an open high, close and low. All right. So I've got that. So I've already got the price frame now. Just put a fib on. Go that way. Now what I can see is where it potentially might push to, which is here and here, coming back on itself. Now there's also 50% in the middle, which is there, right? So I've got those key elements in. What else can I do? Well, I can now put on fib retracement. Well, went up to there, broke the 23, it's running down to the 38 and the 50. So I can mark these in, put these in black so I know what they are. And then in seconds, I have a framework that I can work to. I've just looked at it and it looks like it's selling off. So I might just want to sell this. Now, I have already done a quick analysis of this before I came into it. And there it is there. It's actually telling me it's selling off and it's in a bear market as we speak. So it's looking for about 11 pips. I'll put the bigger version of that. This is what I put in for the guys. As you can see, I've done it before I've come to market. Pull the big version up and then you'll see it. So it's a bear market. So we know we're selling 11 pips. So what's the relationship? Well, the US and the pound are sitting on top of each other. Okay. So there's no real movement in strength, but the US has a better position on change of strength. So that could be forcing the market down. Okay, so I can understand that. Right, let's have a look at what's going on here. Right, okay, there's the range. Is it going to break through? Well, that means I can work out this. Take it down to an hour. And this is where things get a little bit quite good. We can see that push come up and then back down again. Okay. last couple of hours. So what I'm going to do is I'm going to just see how far this might theoretically move to. So it went from there to there. Well, what do you know? 50% is bang on a daily. So it's failed that and pushed down. So there's a high probability it's coming here. Just like so. So now I've got key targets all the way through it. All right. Now what can I do? Now I can find some entry exits. Drop it into 15 minutes. All right. Push down, pulling up against this. All right. So we're going to drop in a fib on here. And all I'm doing here is world building. The whole thing is just world building. So, but then I'm going to zone it out. Okay. So we're in nice areas here. Okay. Now I can see this is pushing up into these levels. So what do you do? Missed. There we go. I know I'm wanting to sell it. Sell's coming in. I'm going to sell down into these using this lot. So at the moment, I'm going to put an order there for it to break through and push down. Okay, so let me do that. And then I'm going to move that order higher with the price. So at the moment, I need to see it get down to here. 11 pips. Bang. Right, so the price is above that. So I can move that onto there. Excellent. See, the market isn't triggering, so it's not a major issue at this moment in time. I can just follow it up, and that's all I'm going to do. I'm going to follow these 15-minute candles up over. Now I can sort of keep updating this, which I will. I'll update this sort of every 15 minutes because it was telling me to wait. Now, at the moment, if I'm waiting, that means I've got to let the market run away from me. I can't just enter market. So we'll be fine. Happy days. Right, so that's what I'm going to do. I'm going to follow that up. If I'm wrong, I've got my levels. So there's a key level here, there's a key level there, swing point. So I can stage all the way up, but we're not into the market as yet. We know we're going to get out for 11 pips because that's what it's told me to do. Happy days. So once that's in, I'll put a marker across where the 11 pips are, and I'll put the target down onto a level, and then that zone, anywhere in that, fantastic. So let's play it out, see what happens, because I know it's dangerous because there's news that last one. So I've got about an hour and 20 minutes to get in and out of this. If not, I'll just close it off and then put it down to a bad job. Okay, catch you in a bit. Okay, guys, we're coming into a news announcement in a minute. It's a red letter announcement, but it's not massive. but it might be enough to get me out of this. There we go. It's coming in now. I'm watching this simply so I can pull the plug if I need to. But at the minute, it's not frightening at all. In fact, it's not doing a great deal. You know, the announcements coming in, it's not spiking the market. And this is where your homework comes in. Because for all I knew it was coming, I also know that it's not major impact. It's not like a non-farm payroll that'll throw the market all over the place. But what it'll do, it can accelerate a decision I've already made, which in this case was to the sell side. So all I'm going to do here is just sit and watch it. Am I frightened of it? Not in your Nelly. And as you can see, there's just not a lot going on. It's just having a bit of a think. There's a couple of announcements coming in. If it was massive, it would have just slammed down in a big red candle, but it's not. And at the moment, I'm kind of risk positive or net positive, so it doesn't really bother me. You know, I just sit and watch it, see how it goes. And well, kind of end my day off. But all I want to do now is just get this to the bottom. This is the beauty of staging trades. Black box at the top is kind of my box of pain. Don't want the price to go into that. If it does, well, then I've got some thinking to do. But other than that, no. So where's the thought process in all of this? Why am I sitting here cool as a cucumber? Well, it's dead easy. I trade small. I trade small size in relation to the size of the account. If you're watching the Vanguard series where I'm trading like a few £100, I actually trade at about 20p, 20 pence a position. It's peanuts, it's nothing. I mean, on that, it's just, why bother? You know, give me a second, because I am watching this as well. On another screen. Okay. Right, just move that out of the way. Happy days, happy with that. Everything's going to plan. So it's 40 quid positive at the moment, 42 positive. I only wanted 11 pips from an initial fiver. So it'll be like about 55 quid. So we're already ahead of that now. So 10 times the first position. But I need to get that first position 10 times as well. Maybe he's worded that a bit wrong. I've got in the bank more than what I set out to achieve at the beginning. Now, staging it backwards, if you can imagine, it's 4 trades just rolled into one. Whereas you guys would go 100% to market, oh, I'm wrong. Then go 100% to market again, oh, I'm wrong. Oh, 100% to market again, oh, I'm wrong. And then probably end up in the same place this is, but it'll have cost you a fortune. Whereas if you have your single position broken up, well, you're just calm and relaxed. It's a different concept, and it's a hard one to get your head around unless you start doing this for a living. If you're doing it as a retail, I've seen a few videos and I watch the risk reward and all that. Well, fine. But have you made a lot of money over the last 5 years? Not the last 5 days, years. If the answer is yes, then fair play to you. You're on to a winner and keep doing what you're doing. But if the answer is no, you've still got a lot of work to do. And you've got a lot of understanding of how these markets operate. I was asked today why my win rate is so high. It's because I don't trade that much, guys. Not really. I trade once or twice a day, and when I go to market, I go into it like this. So I'll have my trades compressed into one, and I work on what's called net positives. Now, a net positive is, like at this moment in time, if I kill this trade now, that's 65, that's 26, this one's minus, that's minus, but the overall basket is worth £62 net positive. So if I pull the plug now, if I pull it now, I've got £70 in my favour. Do I care about these two? Do I fuck? You know, not interested in them in the slightest. I'm only interested in the top figure. In the top figure, if I just kind of flick this on, you'll be able to see it. There's the net positive. It's £100 across the positions. Pull that down, you'll see that one's red. You know, so I could kill this and I'm fine. All right, that's the beauty of what I do. All right, net positive is definitely the way forward because it buys you out of trouble. If I entered the full position here, I'd have had to weather all of that pain to come back, and then I'll just say be getting out break even. Now my rules are 1, 2, 3, 4, get out where I got in. So I'm looking to get out now. So what I'm going to do, I'm just going to flick that over. And in fact, as soon as that goes blue again, I'm going to pull the plug. All right. And that's it. That's trading in a nutshell. It's pulling away from itself. Still not worried. The pressure is still there. Right, so we'll just drop that back a second and we'll watch it. And we'll see what's going on. Right, let's see what the situation is down on a 5-minute chart. Right, okay. Are we still there? Yeah. So what we're going to do, we're going to drag all of these orders into here. So if I haven't got time to do it, it'll do it itself. Pull them up onto there. Just like so. Right, we're still net positive with a decent amount of money. And I've got all of the targets in the same place. Right, it's pulled away a little bit. Okay, should have took it here, but I was rabbling with you guys, but the candle hasn't finished yet, so I'm not really that fussed either. It's got 3 minutes left of that candle. And it's actually got 8 minutes left of the 15-minute candle, which is the one that I watch. So let's just play this out, but rather than bang on for the next sort of 8 minutes, I'll just leave the camera running and we'll get out and then I'll come back to you. Okay guys, so we're still within the 15-minute candle. It's pushed up, which it often will. A reaction to a news event will always cause sort of a push down and a push back up. And then what will happen is if it doesn't break the top of the prior high, it'll then carry on in its general trend. Well, I already worked out that I wanted this to be short. And here we are. It's gone up. My rule set is in place. Get out where I got in. 1, 2, 3, 4. And it's struggling in and around here. But look where it's struggling. It's a key level. It's a key level that I'd pre-marked here. Okay. And those levels came from structure points. So again, it's come down. I'm not going to risk it the next time. When it comes back, as soon as it gets in and around here, we're getting out. Okay. But what it's shown is the power of sort of doing your homework. You get your homework right, the chart, well, all you've got to do is just pick areas out where you want to get involved and manage it out. Really that simple. I mean, it's got what, 12 quid to go. So that's a couple of pips. It's coming down nicely. We're at 126. Should I sacrifice it? Well, I'm humming and hawing about it, thinking about it. But it's still got 2 minutes left of the 15-minute candle. So anything can happen in those 2 minutes. It could just scream down, hit the target, could actually scream away. But at the moment, well, there we are. It's pushing down. Just so you can see it, it's pushing down. We've still got 2 minutes to go. Right, we threw it. We just need to get to the target point where it's pushing through the spread And then it's a case of boom shanker, let's get out and run for it. Come on, what have we got? We've got 30 seconds or so left of the candle. We're on 1344. We had 160 quid. Should we kill this off? Yes, we're going to. Boom. Right. That's it. We're done with a profit of 162. Now, for me, that was a managed trade. It was a good trade. All the tickets are gone. And why did I kill it? Because it was going to bounce. And there's the bounce. I don't want to go through that roller coaster again for another 15 minutes. So the orders are out. I've got no tickets left. And there's the trade. Start to finish. Planned out. 162 quid. Based on what I see. And now look. The new 15-minute candle is now looking to push out. And it could easily just push up to here. Think about it. And then come back down again. It's Friday afternoon. I didn't want to do this in the first place, but I did it because I feel obliged. Whenever I talk about something to the guys, whatever it is, I'll try and back it up. And I think that's the fairest way. Now, when you see these videos, you've got to remember, I do these nearly every day. You know, and if you ask me, I'll just go, look at this chart, like USJPY. What do you think of that? Well, I'll tell them what I think of it. And then if I think it's viable, I'll show you what my thoughts are in practice. That's what this is. But it all comes down to one thing. Just one. And it's not the coffee. Because we all know Scruffy likes a coffee. And he certainly does. And it's not taking a shit trade. See that? That's a shit. My shit. Yeah? It's about homework, guys. Do your homework. Chart will look after itself. And if you're watching the chart and you've got your levels in key, there you go. There it is, pushing away. I was right to kill it when I did. Take the money when it's offered and be happy. Because the market will only give you what it's willing to give. And that's it. So I hope that kind of helps you guys. Genuinely do. And as always, trade well. Keep your risk managed. But above all, do what you love. And the money will follow. See you all in the next one.